Michael Burry just unloaded over $70 million in shares, liquidating his entire holdings, except for one equity, doubling his investment in a firm that other investors are rapidly abandoning. Burry is among the rare investors who anticipated the 2008 economic meltdown, betting against the housing sector and earning $700 million from the decision. Major victories like that have helped Burry's hedge fund, Scion Asset Management, significantly outperform the S&P 500 and the majority of other funds over the previous decade. Currently, market watchers are closely observing his most recent moves, which include over $187 million in bearish bets. So, which stock is Burry increasing his position in, and what does this dramatic portfolio change indicate about his perspective on the financial markets? That's what we'll explore in this video. This was Burry's investment portfolio in Q4 2024, heavily focused on Chinese tech titans like Alibaba, BU, and JD, along with defensive and value-oriented holdings in healthcare and daily essentials. And here's his stock portfolio at present. That's correct. Burry sold all his previous positions and doubled down on cosmetics powerhouse Estée Lauder from 100,000 to 200,000 shares, totaling $13.2 million. It now constitutes 100% of his portfolio. This isn't the only area where he's allocating capital. We'll return to that momentarily. But this clearly represents a dramatic change in strategy for Burry, and it might appear to be a surprising move, especially given that Estée Lauder has been underperforming. The beauty company's share value has declined over 80% since its 2021 peak. However, Burry is recognized for his contrarian investment philosophy, swimming against the current and finding returns in undervalued and neglected firms he believes will recover. But it's a significant wager, considering how bleak things currently look for Estée Lauder. The company posted a 10% decline in net revenue for the first quarter of this year, and there's more. Their operating profits are eroding, cash reserves are lower, and earnings have been slashed by 50%. A major reason for the weak performance is a slumping consumer sector, particularly in Asia. Estée Lauder depends on the Asia-Pacific region for 31% of its income, and it was severely impacted by the recent downturn in China's economy. This resulted in numerous rating cuts from analysts on Wall Street, signaling a negative forecast for the firm. So, everyone appears to dislike the stock, but that's precisely when Michael Burry decides to invest further. That's his typical investment approach. He's a value investor, following the footsteps of Warren Buffett, seeking out discounted businesses with solid core metrics. And that often involves looking for stocks that are dismissed by the broader market. Burry has followed this approach before. Consider GameStop. The gaming retailer was long shunned by the market, facing declining physical game sales and concerns over its relevance. Many viewed it as a failing chain in a digital world. Around 2019, Michael Burry acquired a notable stake in GameStop, spotting worth in its assets and turnaround prospects that the market overlooked. His investment drew considerable interest during the notorious short squeeze in early 2021, when GameStop stock surged from below $5 in 2019 to an intraday peak near $500 in January 2021. Burry exited before the Reddit-fueled spike, but he still pocketed approximately $100 million. So, could Estée Lauder follow a similar trajectory? It's uncertain, but there are some encouraging indicators. Firstly, Estée Lauder reported a gross profit margin of 75%. That's impressive for the sector and a strong indicator of financial health. The firm's price-to-sales multiple is 1.67, which is significantly beneath its rivals in the beauty segment. That implies it might be underpriced. The business also appointed a new CEO who has unveiled a strategy to revitalize the company. And if China's economy starts to bounce back, consumer spending might rebound too, potentially lifting Estée Lauder's earnings and share price. All these factors could serve as catalysts for the beaten-down stock and suggest Burry's large wager might succeed. However, Burry's portfolio overhaul also suggests a broader negative view on the macroeconomic picture. For instance, putting more capital into a cosmetics brand may signal that Burry anticipates a recession looming. That relates to the concept of the lipstick effect. It's the belief that during financial stress like a downturn, consumers reduce big expenditures like vehicles or travel, but continue buying small indulgences like makeup. In this context, cosmetic companies are seen as safe haven stocks. The term lipstick effect was coined by Estée Lauder's chairman in the early 2000s slowdown. He noted that lipstick sales rose despite the economic slump. And that's factual. In the 2001 recession, U.S. GDP grew by merely 1%, but Estée Lauder's sales climbed 5.5%. In the 2008 crisis, U.S. GDP declined 2.8%, yet Estée Lauder's sales rose 7.7%. This suggests Burry foresees an economic slump, or at least some slowdown. Hence, he's bought a stock he thinks can hold up during turbulence. But investing more in Estée Lauder isn't the only way he's deploying cash. He's also initiated a series of bold put options against high-flying stocks. A put option grants the holder the right to sell a security at a fixed rate by a specific date, making money if prices drop. These are pessimistic wagers that the stock will decline. One of his targets is semiconductor giant Nvidia, with a put position of $97.5 million. He may be doubtful about AI because he feels that its growth story is already fully reflected in stock prices. That raises the likelihood of a correction since he believes current valuations lack supporting fundamentals. He has also bought puts against Chinese tech companies that he recently divested. Alibaba at $26.45 million, PD Holdings at $23.7 million, JD.com at $16.45 million, BU at $9.2 million, and Trip.com at $12.72 million. The pivot to bearish stances on Chinese tech signifies a reversal from his earlier optimism and hints at fears regarding the sustainability of recent upswings, possibly due to geopolitical risks such as tariffs. These major decisions in Burry's Scion portfolio reflect a firm, contrarian viewpoint for which he's become well known. Ultimately, he seems to be positioning for a general downturn in the markets, as overvalued tech stocks experience declines, while a sleeper stock like Estée Lauder possibly recovers from its plunge. At Millionaire Hidden Investments, we'll keep reporting on key portfolio changes by influential figures like Michael Burry, as well as other financial stories and economic shifts. Make sure to subscribe to stay informed. Thanks for watching.